Hi guys, welcome to the honeystocks.com weekend stock market analysis for the 1st of June 2019. Before I get into this, please pause the video, give that a quick read over, make sure you're comfortable with it before watching the next 15 minutes or so. If this is your first time here, what I have for you is around 15 charts, 15 stocks, a little bit of market analysis that I feel like everybody needs to be considering for the forthcoming week. I do not trade penny stocks. I don't trade Bitcoin or cryptos, and I don't believe in get rich quick schemes. I have a philosophy which you will see in just a second that is built upon optimal entries into the market. I trade with a lot of discipline. That is my edge. And hopefully, within the next 15-20 minutes, you will have some concrete charts to do your own due diligence on. Make sure any potential positions fit your own trading plans, your own rules. Make sure you have your edge, just like I do. And if you're somebody that struggles, if you're somebody that doesn't have perhaps the consistency they're looking for, hopefully we can help to make a difference for you. But if you enjoy the video, the presentation, please feel free to subscribe to our YouTube channel. Let us know what you think. If there's any stocks that are perhaps that I'm missing that should be considered for next week, please do let me know. But rather than me ramble on in my Scottish accent, I'll just get started. Now, first up, I just want to quickly touch on the overall market and why I have the charts presented to you today, and why I have the individual stocks selected that I do. So what we can see is the S&P 500 had a failed move above previous highs. It broke down. We tested previous resistance, and we've had a move to the upside followed by a decline. Now we've broke below this level, but the key for me is we've broken below the 200 SMA on the daily chart. Now for me that now represents opportunity, and I have opportunity for you today. So first thing also to say is it's a very news driven market at the moment. I think most of us understand that. However, if you understand that with a news driven market like we have, certainly we can take optimal entries into the market, but we have to also have the understanding that there could be a tweet from Trump's little Twitter fingers, at any moment. There could be news that comes out that just simply rebounds the market. But what we have to do in scenarios like this is we just have to trade with price until price tells us otherwise. So the S&P 500 breaking down below key levels is not good news for price. So what we can expect to see is the majority of the individual components within the market to drop as well. So this is where I see opportunity at the moment. So first up, and this may be controversial for some of you, Goldman Sachs, we're up 12% year to date. However, we are now starting to break down. Previous support has now turned into resistance. We were trading in a bit of a range there, but we've now broken to the downside on that range. Certainly, optimal entry was around 186, but if we take the view that the overall market is going to continue to decline, then certainly there is a case to be made for Goldman Sachs to head towards 158, which is previous support for price. I was bearish on Goldman Sachs last year when we had the decline in the market. So absolutely, it has a precedent for big declines, and certainly it's starting to kind of look that way at the moment. Next up, we have Urban Outfitters, down 31% year to date, steady decline. We have resistance at a logical area that you would expect, and certainly it's now just moving south, as they say. And I feel like if we get a break below previous levels of support, then I think an optimal entry would be potentially around $21 to the downside. So what we can expect, I think, with stocks that are already in decline, with a declining market, it just makes sense that those stocks continue to decline. I'm 90% technical, 10% eye on fundamentals. I don't really care much for what the balance sheet of the company looks like. I don't like to trade on hope, but certainly with Urban Outfitters, there's a potential there to short below $21. Canopy Growth, earnings 26th of June, so we've got a few weeks until earnings. It's obviously up big this year. However, again, we're now trading below key levels in the market, and we've had a break to the downside. So that's not good news for any of you that might be holding CGC at the moment. And certainly there's an opportunity to look to potentially short, buy puts, take puts, whatever your chosen method for trading the market is. I feel like CGC at the moment is decline is there for all to see. Next up, we've got Aker Solutions. Now, this is a Norwegian company. We've obviously got a very key support level in the market dating back to last year. Huge decline recently. So for me, I think setting an alert for $34, looking to potentially short, would be logical. So it's down 10% year to date. So like I said before, stocks that are already in decline, I would expect to decline further. Good old Overstock, the gift that just keeps on giving. Now, certainly, it's had a complete meltdown, I think would be fair to say. Very clean downtrend. However, I think the common misconception is that just because the stock has already declined 80%, that it still doesn't represent opportunity. If you have the understanding that stocks can absolutely go to zero, which I'm not saying for a second that Overstock is going to zero. What I am saying is there are key levels that we can still look to take advantage of declines. Now, if we understand that Overstock is now broken below $10, and if we understand what happened to perhaps General Electric last year, where we had to break below $10. I think it got as low as maybe $5.50, $6. That was a stock that I was bearish on at the time. If you have the understanding that there's still a lot more for it to potentially drop, then below $10 is still an optimal entry. It's obviously down 32% year to date. We've obviously had the mammoth drop. I think we can all see the chart here, but certainly Overstock at the moment is certainly just, it's not one that I would be looking to buy the dip. I would be looking to trade with price. Next up, we've got Electronic Arts. Now, it's up 20% year to date, which is decent. We're trading around $93 at the moment. However, we are flirting with trend line here. We've obviously got key resistance support. So I think if we get a break to the downside here, then that might well represent opportunity. I think setting an alert for $89 with the view of revisiting the stock and obviously assessing what the overall market looks like at the time as well. But I think if we get a break to the downside, then that's not good news for Electronic Arts. The other thing to say is when one market, like the stock market, starts a decline, we can often look to other areas of the market for potential upside. Now, as we can see here, Kirkland Lake is a company that's aligned with gold. So if we have the understanding that the big money, the hedge funds, etc., always have to have their money working for them, when the stock market declines, what you'll find is the money starts to come out of the stock market, which is why we see such big drops. And then they start to reallocate their risk elsewhere. And if you have an understanding of where to look, then it can be very, very profitable. When we had the stock market decline last year, a lot of my guys were straight into gold, and certainly Kirkland Lake was a big, big winner. Uh, However, we are very much in a scenario where we have a potential drop on the horizon. It's no surprise to me that Kirkland Lake was up 6 or 7% yesterday. And I think if we get a break above this level here, then that certainly would represent an optimal entry into the market. Potential resistance at $50. So for those of you that are conservative, you may wish to wait for $50 to clear. As I said before, if you are liking the presentation and the charts make a lot of sense to you, please subscribe to our YouTube channel. Again, let us know what you think. Give it a thumbs up. I am trying to obviously get my content out there, and the more likes, more comments, the better. So yeah, please feel free to comment to your heart's content, and I will try to reply to any of you that post, ticker symbols or stocks, etc. Next up, we've got AbbVie, down 16% year to date. One of my clients, Nick, actually highlighted this last week. And certainly, again, it represents opportunity. I think if we break below this key support level here and we look for something around $76, $75, then there's a potential there to short AbbVie. So, yeah, I think the chart makes sense on very, many levels, and hopefully that just makes sense. American Airlines is in disarray, and we've had a breakdown. This is a chart that I was bearish on a week ago, and we've got the breakdown followed by continuation. So I feel with American Airlines, I think any strength that it demonstrates, I think is just a short-term counter trend move, and it will represent opportunity to perhaps move in on any sort of pullback. So there's a very clear support level around $25 for the stock. So certainly that is where I ultimately expect to see American Airlines go, at least in the short to medium term. Eli Lilly, certainly good company. It's done absolutely nothing this year, and certainly looking for a potential short. So I think below $113 would represent opportunity. The one thing that I understand about the market is when key levels keep getting retested, eventually something usually gives. So there's nothing wrong with setting the alert for Eli Lilly and looking to just potentially revisit it if the alert is set off. Excuse me. So I think below 113 and I think below 105 are the two logical areas that we should be looking at. We also have Avis Budget Group, so we're up 28% year to date. However, key support level down here, we've been trading in a bit of a range, and we've had a break to the downside. Now, that break to the downside has obviously got not good news. There are certain indicators that I'm looking at that would suggest that we're due perhaps a little bit of a bounce to the upside. But again, very similar to American Airlines, I think any bounce to the upside that we get will probably be a short-term counter trend move unless we reclaim key levels. So I think any sort of pullback would represent opportunity as well. And ultimately, I see this going towards 22. It just makes sense if the market continues to decline. Now, Nvidia, everybody's favorite from last year, it obviously fallen off a cliff. I've spoken to so many people over the last few months that are currently holding this stock, and they just refuse to let it go. And this is why I don't like long-term investing. It's why my I suppose my strategy is based upon a rules-based system. You'll never see me holding on to a stock that's declining, 70%, 80%. It's only really investors that get caught up and obviously have to take that kind of pain. So for me, it's obviously since we had the breakdown, certainly it's done what you would expect. Again, certain indicators tell me that it's due to have a little bit of a bounce to the upside, but certainly I think if you set an alert for $120 and revisit the stock, then I'm not saying to jump in on it this week, but given the move to the downside, it wouldn't surprise me that we test $120 in a declining market. National Beverage Corp, Fizz. Now, certainly we broke in below key support levels at the start of the year. We retested, and then it's been met with a further decline. Now, again, we're on the cusp of a further breakdown. We're at key support levels at the moment, so it just makes sense to me that if we break below that key level for the stock, then that stock will take the next leg lower. It's already down nearly 40% year to date, which isn't great. So again, it's really just about identifying strength within the market, guys. It's all good and well, to have a permanently bullish philosophy. You're always looking to buy the dip, but sometimes buying the dip just doesn't make sense logically. And I think this is certainly a scenario that's playing out at the moment. I'm seeing across many social media platforms, everybody's saying, let's buy this, let's buy that. Possibly over the longer term, you'll be absolutely fine. But if you're a trader and not a long-term investor, then you're opening yourself up to a lot of mental hurdles. You're potentially opening yourself up to losses, which isn't great, especially if you're trying to learn the stock market at the moment. It just makes sense to identify where the strength in the market is and just trade with price. I cannot emphasize it enough, and it's a philosophy that's lost on absolutely everybody. You have to trade with price. It's just easier, and I think once you have that understanding, then you'll find that you'll start to get that consistency. You'll start to find your edge. So certainly with National Beverage Corp, I think it represents a bit of opportunity. And I also want to just touch on tech for a second. Now, I think certainly on Friday there was an anomaly with quite a few stocks that it rallied a little bit. However, tech overall is obviously on a bit of a decline at the moment, and very, very similar to the S&P 500, where we're now closing and breaking below key levels in the market. It's absolutely not good news for tech. So unless there's some huge rally on Monday, which could absolutely happen, it absolutely could, then I think what you're going to find is a lot of the tech stocks that are aligned, obviously with the Nasdaq, etc. If we see the triple Q drop further, your tech stocks are going to drop as well. So we're at a very precarious moment, I think would be the correct wording to use in the market at the moment. There's going to be a lot of you out there that just keep buying the dip and you just keep getting burned. So I would just urge you to just trade with price. It just makes sense on many, many levels. Now, obviously, if you're somebody that is struggling a little bit, you might be watching this and thinking, what the hell is this? You might have picked up that my style is very simple to understand. I don't like to overcomplicate things. I think as soon as you start to move down the road of, charts that just looks like a pigsty or a dog's dinner, then you're just opening yourself up to illogical decision making. And I also understand that certainly the path for most traders is often quite a difficult one. And I think the question I like to ask a lot of people is, how much happier would your life be if you could cut out a lot of the noise and just make incredibly good, consistent decisions. And also, what if you didn't feel like you were at the mercy of the stock market? What if you were able to build your own trading plan and had a rule set for the rest of your life and were able to maybe find your edge? Now, if this is the first time that you've maybe watched my analysis, you possibly don't know who I am, what it is that I do, etc. But I run honeystocks.com, and unlike a lot of the get rich quick schemes and a lot of the nonsense that I see floating around social media from all these gurus, I actually like to record every single trade idea that I post into my client group for complete and open transparency. You can go onto my website, you can see what date that I posted a chart, you can see the price that I recommended, and you can see what the stock has then gone on to do. That's 2019. 2018 is also published on my website, and this is a very condensed version just so that I could fit it into this presentation. But if you go onto my website and have a look through that, I log every single one. There's not one stock that I have not left off there. They're all in there. And I understand that with, I suppose, most traders that are learning, I know that the average journey time is a couple of years. During that time, you're probably learning from losses, you're probably trying to learn from YouTube, and you're no doubt reading book after book. And I know, especially for those of you that maybe learn from losses, I know that oftentimes it just results in you saying that to the market, which it doesn't have to be that way, because I think if you have the understanding and you can get the discipline and you can have the technical knowledge of what to look for, when to act, what represents an optimal entry, when to exit, I think as soon as you start to kind of put everything together and you build your psychology, etc., then you can absolutely be a success. And that's what we do at honeystocks.com. We genuinely believe in making a difference. You can jump onto our website, check out all the testimonials from all our clients who are based all over the world. And yeah, it's just a really cool place to be. And certainly with the support that's in place for anybody that likes to come in or wants to come in and learn our approach, then you've probably got a decision to make. If you're somebody that does struggle, are you going to keep doing it the old way, or do you want to learn a new way that's built upon discipline, rules, and consistency? If you do want to explore a new way, then it's very simple. All you need to do is really just jump onto our website, honeystocks.com, click apply, just tell me what you struggle with. We'll have a quick chat and we'll see if we can help in some way. But it really just start, with jumping onto our website and clicking apply. Like I said, choose the time that suits you. Because this is going out to social media this week, I have opened up my calendar fully for the next 4 days. So if you are somebody that wants to talk to somebody and not just go back and forth on email, if you actually want to talk to somebody that can potentially help you, then please just jump on and tell me what you struggle with. A lot of the time I can help people on a call. I'm not going to try and hard sell you anything. It's very, very informal, and we'll see if we can help in some way. So if you've stuck around to the end, from the bottom of my heart, thank you very much for watching, and hope to speak to you soon.